Joining us this morning with his outlook is China Beige Book CEO Leland Miller. Leland, it's great to have you back. I guess I'm curious to know what your message would be to investors who are pinning their hopes on some kind of June stimulus surprise.
Well, we've seen this story before. I mean, look what happened in 2022, 2021. If people are constantly waiting for this big stimulus package, they're going to probably be very disappointed. It's not that China doesn't want to add any additional stimulus. It's just there's a reality to what China's growth, China's economic policymaking is right now, and that is that they are being very incremental. They're being very restrained. And, we have already seen, there's talks about these interest rate cuts. We've already seen monetary easing throughout this year, which has done a little bit to help growth. But none of these are the big save of the economy that people are expecting and have been led is somehow in the pipeline.
To the degree that they are stuck with some macro issues, I wonder how much of it is due to the notion that corporates around the world are trying to diversify supply chain. I noticed the Times piece today. I mean, they talk about youth unemployment, but they also say foreign investment is below last year. I mean, is that trend really working against them right now?
Well, there's certain peculiarities with the numbers because there's a lot of Hong Kong round tripping. But look, all of these are serious concerns in the medium term. The reason that the markets are so upset about the China recovery right now is they had absolutely ludicrous expectations of there being this, whiz-bang early year China recovery, which was never realistic. One of the things that we had been yelling from the treetops in December and January and February was you're not going to get a recovery early on because everyone's going to be sick with COVID. And, for hundreds of millions of people have to get COVID, get through that. And then you have to break down the structures of the COVID zero administrative state. So now we're getting to the second quarter. And I think that the recovery is actually a little bit better than markets expect. They were expecting something so high, so they're disappointed. But they should be realizing that things are not quite as bad as they think.
So that's why the economic recovery has been disappointing, Leland, because you think people have been sick?
Well, I think early in the year, there was never going to be a recovery. So second quarter, the question is, why are people disappointed with the Chinese economic recovery? Well, it hasn't been great. But if you look at what really sort of knocked people off their feet, it was the May manufacturing PMI. Now, there's some weird data peculiarities this year. April was really, really weak a year ago because of the China lockdowns in Shanghai and elsewhere. May was stronger. So you actually had from April to May, you had a different base of comparison. And so you saw what people thought was a deceleration of growth. There was no deceleration of growth. Caixin has shown improvement 5 straight months in the Chinese economy. We've shown improvement 3 straight months in the Chinese economy. There's just a complete misinterpretation of what's happening right now.
When I talk to retailers, global retailers and brands that do a lot of business there, they say that it's booming in the local market, in the Chinese market, that consumers are out in force, that they're seeing a big growth bounce back. It's just not, they're not traveling as much. The mobility is a little bit different, but that there is a lot of pent up demand from consumers there. Is that not what you're seeing?
No, Sarah, I agree with you completely. Look, if your expectations are sky high, you're going to be disappointed by what China has going to be delivering in the second quarter. But if you are looking at whether there's sequential improvement, are things getting better? The answer is yes. Property is a mess right now, which is why there's so much talk about property stimulus coming down, the pipeline. But the consumption is improving. It's uneven, but it's getting better. Manufacturing is coming off 3 years of absolutely gangbusters growth and is still doing relatively okay. I think we're still seeing improvement in 2023. So again, we're not here to say everything is peachy in the Chinese economy. That's not us. But things are a lot better than people understand. There's much too much gloom on terms of what's happening with recovery.